Life Management Science Labs would like to acknowledge that we live and produce this podcast on the traditional lands of the Wurundjeri people. We'd also like to acknowledge the traditional owners of the lands of our listeners and our international colleagues. We'd like to pay our respects to their elders past, present, and emerging. Hello everyone, and welcome to Wealth Pathways, the Affluence Science Insights podcast produced by LMSL, the Life Management Science Labs. We are champions of life management science, providing structured insights informed by science and inspired by practice on key aspects of conscious living. Each week, we bring you scientific and practical insights on each element with the expert knowledge of professionals in the field. I'm your host, Marie Stella, coming to your ears from Naarm, Melbourne, Australia. Let's learn together.
Hello, everyone, and welcome back to the show. Today, we are diving into the complex finance topic of stocks to learn how to invest properly in times where the market can be volatile. Joining us today is our expert, Art Durnev. Art holds the prestigious Patricia A. and George W. Weld Jr. Distinguished Chair in Finance at the Robbins Business School of the University of Richmond. He is the author of a new comprehensive finance textbook, Modern Money Mechanics. He is a teaching fellow nominee, member of the University Faculty Senate, Strategic Planning Committee, Finance and Operations Committee, and a judo coach at Spiders Judo Club. With research expertise in corporate finance, climate and finance, and politics and finance, he has published his work in dozens of globally recognized journals. His teaching experience stretches across the globe, as he has taught classes for executives, MBAs, PhDs, and undergraduates in various countries, including the United States, Canada, Hong Kong, the United Kingdom, Italy, Japan, and Russia. He has also presented his research at numerous seminars and conferences worldwide and has actively engaged with global media outlets through interviews, public speeches, and op-eds. In addition to his passion for finance, he is an enthusiast of Italian pop music, competitive judo, earning a black belt in 2016 and achieving the top ranking in the US in his category in 2014 and 2015. As well as ultra-marathons, competitive poker, and international politics. So, I'm excited to learn from Art today. Welcome to the show.
Thank you. Thank you for your nice introduction. Good to be
Of
here.
course. Yeah, we're happy to have you here. So, to get us started, could you tell us a bit about your background? What led you to pursue your career in finance?
Well, I've had around 25 years of pure academic experience being a finance professor. Originally, I was born and raised back in USSR, now known as Russia. And I left to pursue my PhD first in economics in 1996, really long time ago. And I got my master's degree in economics from Penn State, Pennsylvania State University. Then I switched to pursue my PhD in finance at the University of Michigan. My first job was as an assistant professor at the University of Miami, Florida. Nice warm weather. Then, out of the blue, I decided to move to Canada, where I was a professor at McGill University in Montreal. Big change in climate, lots of snow there. Then my longest stretch was as a professor at the University of Iowa. I was director of PhD studies there. I've done a lot of executive teaching, MBA teaching, undergraduate teaching. And quite recently, 2 years ago, I moved to the East Coast, the state of Virginia, University of Richmond, where I teach mostly undergraduate classes right now. So throughout my life, I've done a lot of teaching. I really enjoy teaching at the executive level because it gave me all the opportunities to travel around the world. I taught in over a dozen of countries, as you mentioned, mostly in Asia and Europe.
Wow. That is an absolutely amazing career that you've had and so varied, so many different places from being brought up in Russia. That's incredible. Thank you for sharing that. And we'd like to get to know you a little bit more as well. So this is our segment, Have You Met Art? So first of all, can you tell us more about what you like to do in your spare time?
Well, I like doing my research. sounds a little bit maybe like a little bit boring.
No, that's
I, li-
okay.
I like following political news, and when I follow the political news, I also try to model them using mathematical tools. So I not only use mathematics to model for academic papers that we need to publish, required to publish. I also like playing around with different types of economic models that can predict the future, not only based on the financial market performance, but in general, where this entire world is heading to. So this is one of my hobbies. Well, I like doing sports. I had a meaningful athletic career in judo, which I started at much later stages of my life when I was 40 years old. And after 10 years, I had to quit because judo is a full contact sport and it creates a lot of injuries. But I also traveled the world performing at various competitions in judo.
Yeah, wow. That's really inspiring to hear that you started it, you know, so late in life and yet you were still able to compete and be really successful. So,
I do coaching now. I we have a very nice club where I coach students of approximately your age, and
yeah.
it's good to see them succeed in judo.
Yeah, of course. That must be very rewarding. And my next question for you is, do you have a favorite book?
Yes, I do. And actually, I've read this book back when I was a teenage years back in USSR, and that happened to be a book by a famous Australian writer, Fatal Shores by Robert Huss.
Amazing.
Uh, I don't know if you know about this book. It's about how Australia started its journey from being a British colony where convicts were sent from Britain and from Ireland. And what I like the most about this book, because it shows how societies can develop. It's more like a social evolution fast forwarded, because people were unfairly sent from Great Britain and Ireland to Australia. They suffered a lot. There were all kinds of human rights abuses. There was hardship. There was starvation. There was abuse by prisoners guard. And the most interesting part of this book is that how Australia managed to evolve where it is now to a fully functional, normal, democratic society, beating all the odds. So this is one of my favorite books. I also have another favorite book, which I always bring it to my class when I especially teach international finance. And the book is The Wizard of Oz. You have to see The Wonderful Wizard of Oz. Probably you know that book and the movie
Yes.
and various cartoons. So not many people know that this book was not written for children. This book is actually an allegory. It's a satire on the political climate in the United States. It's a very serious book where it depicts the populist move in the United States. So there were presidential elections in 1896 and in 900, and there were two candidates. One of the candidates was a populist candidate. The second candidate was not a populist candidate. The book is actually about the monetary system, which resonates to what I do in my life, finance. Back that time, the world operated, especially in the United States, under such gold standard. And because of the gold standard, the United States could not print more money than the gold reserves it had. So the movement was actually big political push to allow silver to be used in addition to gold. So the Silver Road, the Wizard of Oz, every character there is based on the actual person. So the Wizard of Oz was one of the presidential candidates. Dorothy, the sweet Dorothy, was representing the United States as the whole. The Tin Man was representing the workers, the struggling worker class. And the worker class was struggling because of the industrial revolution. The Scarecrow was impoverished farmer. So the entire book is based, you can teach the entire class just based on this textbook and kind of like build the bridge from the political reality in the United States to the financial markets. So that's my second favorite book.
Wow, that's fascinating. I didn't even know that. And I feel like I should know that because I really like that story. And I'm quite interested in theatre and that kind of thing. And The Wizard of Oz is a show. So that's really cool to learn. Speaking of, do you have a favorite movie at all?
Yes, my favorite movie happened to be one of the Quentin Tarantino's movie called Pulp Fiction.
Mm,
So, do you know this movie? You
yes,
ever
I've heard
watched
of this one.
Pulp Fiction? Yes. So it's a really, really good, fascinating movie. What's nice about this movie that it has very, very what I call non-linear plot. Just like the stock markets move in different types of directions, the movie has a lot of twists. And people in that movie, if you start analyzing their decisions, people in that movie have to make a lot of choices under uncertainty. So you can also bring a lot of parallels from financial markets and economics to that movie. And so that's my favorite movie. And also that movie had a profound decision when I was 18 years old. So when I was 18 years old, back in USSR, I was a student in electrical engineering. I did not speak any English. I've never been abroad. I've never been thinking of going abroad ever in my life. After that movie, it kind of like motivated me. That was my view and representation of a foreign country, United States. And I thought, well, that's kind of interesting. Maybe I should experience it. And I started switching from engineering to economics. I started learning English. And 3, 4 years after that, I moved to the United States just by myself.
Wow, that is so inspiring. And to think a movie really helped you and motivated you to do that is so interesting. And we're going to speak a little bit later about those twists that you're talking about in the market. So, do you have a favorite podcast?
Well, yes, I do have a favorite podcast, and the name of this podcast is Professor G podcast with Scott Galloway. Scott Galloway is a professor of marketing at Stern School of Business at NYU, New York University. He has a tremendous many years of practical experience. He is the founder of many young startup companies, and he invites not only fellow professors to that podcast, he also invites politicians, sometimes high profile politicians, both Republicans and Democrats. And the subjects they talk about, they discuss, revolve around cryptocurrencies, revolve about technology, and artificial intelligence with great it's a very entertaining podcast. It's not scientific, it's for the general audience, explaining everything in very simple language. What I like about this, because he tries to predict what the effect of artificial intelligence is going to be on your generation. And the general conclusion of almost each episode from that wonderful podcast is that we, all the generation, will figure it out. Our number of years is counted. But the heavy burden of artificial intelligence, the effect on jobs, on salaries, on home ownerships, on stock market is going to be on you, people from 18-year-old to 30-year-old. I have 2 kids, I have 2 boys. That's always in my mind, what their future is going to be, whether it's going to be like my life, whether it's going to be something better or worse. There is a lot of uncertainty just because of artificial intelligence. Anything related to artificial intelligence, how it evolves, what the future is going to be like, this type of podcasts are my favorite right now.
Yeah, absolutely. That's very interesting. And we're going to touch on AI later as well. But first of all, my next question for you is, do you have a role model? Now, this could be either personally or professionally.
Well, I do have a role model. That was one of my former advisors, my former professors. I mean, I became a professor because of him. His name is Han Kim. He was my professor, very famous finance professor at the University of Michigan with very interesting life story. I mean, I'm wishing him well. He's at his very senior age, still doing well, still doing research, and he would be my more like academic and life role model. He had good life, and he's still writing scientific papers at his age.
Yeah, amazing. And finally, do you have a class or a course that you've taken or maybe that you've taught that has inspired you?
Yes, I was thinking a lot about what would be my favorite class I ever taught. And through so many years of teaching and teaching at various levels to different individuals, I taught probably absolutely any finance class, corporate finance, investments. But right now, I'm shifting my focus to teaching more modern things in finance. And the modern things in finance, this is related to what's called fintech, finance technology. Using technology, using blockchain applications, using artificial intelligence and applications, how the banking system operates, how payments are processed, how governments issue cryptocurrencies as the reserve currency to help their finances. So any technology applications in finance, this is what my most recent class is. And I wrote a comprehensive textbook, Modern Money Mechanics, when we discuss and thoroughly investigate these issues, tech applications in finance. So I would say any of my most recent class is my favorite class.
Yeah, absolutely. And since you wrote a whole book about that topic as well, I can imagine it's very, very inspiring and interesting to you.
By the time I finished the last chapter, the entire book became obsolete because this is
Yeah.
how fast this topic is evolving. But it's a
Yeah.
good thing. It's a web-based book, so it can always be updated live.
Ah, that's good. Yeah, I can imagine that. Technology in all fields just moves so quickly; it's very difficult to keep up. So we're going to talk a bit more about the technology soon. But first of all, I'd like to get started with some of the basics for our topic. So my first question for you is: how would you define affluence?
Well, how would I define affluence? I think in simple terms, for the general audience, I define affluence as the power and ability to say no in your life. And I'll give you an example that you have enough confidence personally and you have enough money, you have enough wealth to say no to things that go against your moral principles. For example, you're a young person struggling financially and somebody offers you a job to work for a tobacco company. And you say, that's against my principles, but life is life. I need money, I need to pay rent, I need to eat. I don't like this job, but I have to take it. So the ability to say no to things you don't want to do in your life that stand against your principles, this is my definition of affluence. I would never, ever measure affluence in pure financial terms. For example, $1 million in Australia is different from $1 million in the United States because Australian dollar is a different currency, because the price level is different. So it would be absolutely wrong to define person's affluence by simply putting a dollar sign to it. No, it's just to have enough money, enough wealth, and enough confidence to say no to things you don't want to do that will enable you to do things you actually passionate about in life. But having said so, always keep in mind that something we are passionate about, sometimes we just, life has its own twists and turns. And maybe later in life we regret. We should have done those things. We should have done them differently. So when you reach certain age, just to look back and say, it wasn't so bad.
Yeah, that's a fantastic definition. Thank you for that. And my next one for you is: can you please explain stocks to an absolute beginner for us?
Yes. So when you buy a stock of any company, and I'm not talking about cryptocurrency, let's say you buy one share of Microsoft Corporation, of one share of Nvidia Corporation, or Apple or Google. When you buy a stock, you buy a piece of ownership of the company. So the entire company, many billions of dollars, can be represented by a big pizza pie. You slice this pizza pie into millions of pieces and you buy one piece. So that piece belongs to you. So when you own a stock, you own a tiny slice of the company. At the same time, it gives you the responsibility because when the company is doing well, you're going to do well. You can buy low and sell high and make profit. But when the company is not doing well, you also share the risks of that company, and the CEOs and the managers and every employee. So stock ownership, it's not only about trying to make money by selling when the price appreciates, when it becomes larger. Owning a company also gives the share of that company. Actually, it's a democratic principle. One share gives you one vote at the shareholder meetings. So if you can accumulate enough votes, you can displace the underperforming chief executive owners. Right? That's what's called shareholder activism. So that's what I mean by, in my view, by stock ownership.
Yeah, that makes sense. And so, how would you say that someone's affluence could be influenced by the investment in stocks?
Well, when you invest in stocks, what's really most fascinating is that you can build wealth while you sleep, right? So that's what we teach as the long-term investing, right? So if you have a job and you have a retirement plan, the best thing is never to look at your retirement plan for the next 30, 40 years. So my retirement plan started 20 years ago. I'm a finance professor. Stock markets fluctuate. They go up. Recently, they've been going down. So you don't look at it. You just sit on it, and it's called long-term investment. So you build wealth while you sleep. That's not a bad idea.
Yeah, amazing. And what would you say are the most common misconceptions about stocks?
The most common misconception, and that's actually also affected by the different types of panicking news we get bombarded on TikTok and Instagram. The most common misconception is that investment is a sort of gambling. Sure, there is a little bit of gambling involved there, especially for young people when they trade cryptocurrencies. But in a nutshell, investment is not gambling. So investment is gambling is number one misconception. Second type of misconception is that most people think that they make money only when stock prices increase or even the value of cryptocurrency increases. You bought Bitcoin several years ago, by now you would be a billionaire, right? Because the stock of the price of Bitcoin increased. Actually, smart investors make more money when the stock prices go down and not up. It involves a little bit more complicated strategies. They're not so complicated. Any iPhone app like Robinhood investing. We'll talk about those really good apps anyone can use. So you can actually make more money when the stock prices go down and not up. And most people kind of miss it because they don't have enough financial knowledge, or they don't have the type of knowledge advanced enough to understand it. That's another misconception. And the third misconception is that investment is a zero-sum game. What I mean by the zero-sum game is that if I buy a stock from you and I make money, that at the same time you lose money. If you add my winnings to your losses, it is zero. So if some people become richer, and richer, it means other people lose and become poorer, and poorer. So this is absolutely not true. There are lots of functions of stock markets that benefit the entire society and increases the well-being of everyone around the world. For example, risk sharing. One of the biggest roles of stock markets is to enable companies, investors to share different types of risks. To give a sort of kind of like simple example, imagine a company, and there are a lot of companies like that in Australia, that send students from Australia to study abroad, let's say to the United States. So when you run a company in Australia and you collect money from prospective students, you receive money in Australian dollars, but your costs are in American dollars. And if later something happens and currency exchanges fluctuate and American dollar becomes much stronger relative to Aussie dollar, your costs are going to be inflated. You're going to start losing money. So there are quite simple strategies that involve a little bit like more complicated financial products called futures and forwards that can reduce this type of risk exposure. So the stock market, another big misconception that it's a zero-sum game. It's not a zero-sum game, and eventually everyone benefits. There are a lot of functions of stock markets that are really beneficial.
Okay, interesting. I'm already learning so much that I didn't know. But to be fair, I am very new to this topic. So I'm excited to ask you um, this next question. What would you say are the biggest challenges involved in investing in the stock market?
Right now, the biggest challenges, investing in the stock markets became much easier, right? So
Okay.
this is really like what you can do right now. Anyone, any Uber drivers, for example, they all participate in stock markets. They trade currencies. Any employee at the coffee shop, they have an app, and some of them know finance, the practical values of finance better than me, finance professor. So lots of respect for young people who really want to get involved into that. But the biggest challenges is again, we're constantly bombarded by the news. And some of that type of news is what we call the fake news. So trying to stay away from panicking news, trying to stay away from those Instagram, TikTok videos, buy our crypto, sell this crypto, buy that crypto, I think it's one of the biggest challenges. So I myself use those apps to do a little bit of trading, more like a game for me, right? So, and I myself get influenced by this type of panicking news. The stock market is going to crash. So, staying away from that news, sticking to the plan, and being at least somewhat disciplined, I think is the biggest challenge right now for
Yeah.
individual investors.
Yeah, being disciplined is fantastic advice. So, going a little bit more deeper now into our topic, what would you say are the key challenges that individual stock investors face when they're navigating markets during periods of global uncertainty?
Well, the biggest challenge is actually you need to stop reading the news and you need to stick to the plan. You need to kind of like psychologically zoom out if you are talking about like individual investors.
Yeah.
So you need to zoom out. You also need to learn not only about why stocks fluctuate. They fluctuate because something happens to the company, something happens to the entire country, and every stock in that country is affected. So you need to dissect these different types of information. So for that, you need to learn a little bit of finance, a little bit of formulas. What moves the stock market, what drives the stock market. Because it's not only how company is doing well, whether company is making money, whether company is losing money, it's also a little bit more advanced concept how different types, chunks of money is distributed through time, because $1 million 5 years ahead from you is very different than $5 million that's going to happen tomorrow. So we're talking about what's called the discount factor, discounting. So it's not about the level of well-being of the company, it's also what we call the volatility, the uncertainty. Because especially, I'd like to give you an example, recent presidential election in the United States, Trump administration, lots of news about tariffs, lots of uncertainty. So uncertainty by itself can have a much bigger impact on stock prices and stock market fluctuations than just the mere fact whether the tariffs are good or bad. What I mean by that is that it's not only, for example, if you talk about the effect of tariffs, which are by any economic intuition has negative effects, but it's also about how companies adjust and what the level of uncertainty. Are we going to charge 500% China? Are we going to switch it to 125%? Because businesses can adjust. Businesses have the great ability of adjustments to different supplier chain and different prices, but they just don't know when it's going to happen, today, tomorrow, or in 5 years. So this type of uncertainty, I think, trying to quantify it and use it for your investment strategies is one of the biggest challenges.
Yeah, absolutely. And so, how would you say that individual stock investors can develop a resilient stock investment strategy that would withstand these turbulent times?
Uh, to develop the resilient investment strategy is just to have some basic discipline, just to find time to allocate half an hour every day reading the news, even without actually placing any actual trades. It's just to have a little bit of self-discipline. Try to filter out what type of news you read, when you read, whether you read them in the morning, whether you read them at night, and try to find time for that. Because for busy people, especially for young people, I mean, even finding 1 hour of time a day, that can be a challenge. So what I tell my students is that stop scrolling Instagram reels. Educate yourself instead. Stop looking at the cat videos. Read about stocks.
Yeah, absolutely. It certainly sucks up a lot of your time being on social media. It's designed to keep you in there. And so, how would you say, how important is this discipline and emotional discipline as well for stock investors during volatile market conditions?
I think it's very important. It's very important because, as I said, stock markets move because the types of the news, but they actually move because people actually make certain decisions. Whether you buy a stock, and if everyone keeps buying, stock price increases, or people are driven more by what's called animal spirit. And during the time of uncertainty and panic, people sell, and they sell sometimes too much. The stock market goes down. So developing this type of discipline and sticking to the plan, I think, is one of the most important things. And also realizing is that no matter how smart a person is, no matter how educated a person is, it's okay to make mistakes. First of all, you learn from your mistakes. And also the stock market movements and the price is the sort of aggregate opinion of millions and millions of traders. Whenever you make a particular decision to go against the market, the first thing you should ask, am I really smarter than millions of people on average? Sometimes it can be the case. If the market, for example, is crashing, is driven by some sort of hubris and animal spirits. But the first question to ask, if I want to do something that goes against the trend, am I really, really, really more educated and smarter than millions of people and many of them professionals out there?
Yeah, interesting. Okay, so what do you think people should use in terms of resources? Are there resources, tools, or experts people should be listening to leverage that and make informed decisions and stay ahead of market disruptions?
Yes. So again, the informational technology, the type of news we receive. I mean, I always welcome it. I'm always welcome it because I do believe that smart, educated people have the ability to filter out more relevant news from pure junk, from fake news. But just trying to develop a little bit of discipline, going back to the basics, and reading journals like Wall Street Journal or the British publication The Economist. That's what we've been doing, like I've been doing, for example, 30 years ago, just going back to the basics and reading, and also reading the actual financial reports released by companies, because every company has to publicly release truthful, audited financial reports every quarter when they report their earnings or annual financial statements, just to see what's happening inside the corporation. Because finance is really, really serious business. Some people think that this is something modern. No, but finance started developing millennia ago. Even 2,000 years ago, we had the concept of borrowing, lending, money exchange, and interest rates. So sticking to some basic publication that survive till this day, like Wall Street Journal, that can I think that can benefit everyone. And I'm the victim of these types of news, right? I mean, I have Instagram, I scroll Instagram, I get a video of the cat, I get a video of a new cryptocurrency. I mean, we're all human, and our decisions are driven by the news we receive.
Yeah, absolutely. Okay, so some great resources there. Wall Street Journal, The Economist.
The Economist.
Yeah, I might even be able to link those in our show notes so that
Sure,
people can
sure.
go and have a look. And so now moving on to some more modern things per se, what would you say investors should keep in mind if they're looking at investing in cryptocurrencies?
Yes. First of all, people need to understand why crypto is popular. right? So many people take it as a pure hype speculation device that you can create money, you can create any something in a digital form, not backed up by US or Australian dollar, not backed up by gold. So everyone has understand it that it's something artificially created. Why do we need it at all? Well, inherently, I mean, it's risky, but with companies do use cryptocurrencies. I'll give you an example. So the traditional way for companies to raise money, to raise funding. For example, you have a brilliant idea about your podcast and you want to take it, for example, worldwide and you need to come up with $1 million. How do you do it? Well, the traditional way to raise money is you either borrow, for example, get a business loan, or you issue stocks. We talked about stock markets, right? Apple's, Nvidia, your podcast. You can conduct what's called initial public offering, that you offer shares that backed up by the cash flows, whether you make money, it becomes a part of the stock ownership. So you either issue debt or you issue shares. But recently, what you can do, and it's much faster and I think more convenient way, you can issue your cryptocurrency. This is called initial crypto offering or initial coin offering. And it can be done through the app on your iPhone, right? So if you don't need to raise millions and millions of dollars, and it will be very hard to do, you can raise few hundred thousands of dollars by offering cryptocurrency. The cryptocurrency doesn't give people what we discussed about stocks, this chunk of the company, right? But if the company is doing well, and it's all legitimate, the value of the cryptocurrencies will increase. And it will benefit you when you sell your cryptocurrency to raise money, and it will benefit future investors. This is one thing. Another thing is that the blockchain technology itself, which started from cryptocurrencies, is used by many corporations in their supply chains. For example, Tesla company. Now they don't issue their own cryptocurrency, Tesla company, but the technology behind cryptocurrency, the original one, the blockchain technology and smart protocols enable Tesla to release information about every car in their production process publicly. So if you're an investor, you can see live absolutely every Tesla car at which production stage it is. We put a battery on this car in China. Then we put this right front wheel to Tesla. Then the Tesla is getting shipped. So you cannot have this type of very fast smart contract execution without the underlying crypto technology. Big companies like big discount retail stores like Walmart, for example, in their supply chain, they also use cryptocurrencies. Any commercial mail companies, UPS, FedEx, DHL. We probably heard like have DHL, I would imagine, in Australia. To track the package, they use the blockchain technology. And we wouldn't have this we wouldn't have this tech without the original cryptocurrency protocols. Another application of cryptocurrencies is through in art sale, and I'm talking about the digital art, like what's called NFTs, non-fungible tokens, right? I mean, it's a big effort by every major museum in the world to digitize their arts collections, like the Mona Lisa painting, right? But if anyone can replicate it, it would have zero value. So you need to encrypt it. You need to assign some contracts. You need to assign some ownership rights, and that can only be done through cryptocurrencies. So cryptocurrencies, I mean, they got a bad vibe, right? They got a bad vibe, which is improving, especially like what we call like those silly meme coins, which are not silly anymore, actually. So through the meme coins, but by itself, as we improve the regulation and legitimize the transaction, it's gaining trust. It's gaining trust.
Interesting. Okay. Well, thank you for that very good overview about cryptocurrency. I'd like to now talk about AI. Would you say that if every company starts using AI, does that make the stock market smarter or just more fragile?
Well, it depends what type of AI we are talking about,
Okay.
right? So let's probably start from what I would call real economy, where
Hmm.
AI has tremendous potential to, for example, create a drug that would cure cancer, right? So AI application in organic and non-organic medicine and in pharmaceuticals, because I mean I follow the trends, I use AI myself, I see how it evolves, I try to download and pay more advanced versions. So in terms of research and development and new scientific discoveries and innovations, AI definitely is going to play a major role. Again, by the time we finish this podcast, whatever we say about AI is going to be irrelevant. By that time, AI would already evolve to a completely different level. So with some degree of certainty, many people say it, including AI, which is already smarter than us, that we'll be able to cure cancer, right? So that's a tremendously beneficial things. The new types of drugs, especially the drugs that can tweak and change your genetical code, that's something what we were dreaming about in scientific literature, like even like 20 years ago. So these are another beneficial applications. On the other hand, AI has a lot of it also has a lot of applications in finance. Companies like PayPal, companies like Zelle, when you can send money instantaneously to your friend, to your family members, not through crypto, just through your bank. That's also all now based on AI. Another application AI in finance is preventing fraud, the fraud detection and fraud prevention. It's already being used really widely in the finance industry. For example, when you pay taxes, there's no human being that would read your tax return and see whether there are any fraudulent transactions. It's all long delegated to artificial intelligence. But the rate of transformation and how fast it's moving also creates a lot of opportunity for identity fraud, right? For criminal activity. And AI can generate your image. AI can fake your voice. The number of calls you get on your cell phone probably is increasing exponentially, right? People offering jobs, people offering new crypto, and you don't even know that you're talking to a robot on the other side. So they are still in kind of at the very beginning of the largest and most drastic technological transformation because of AI. And if you ask me which direction it's heading, I mean, we don't know yet. We don't know yet, but it's moving really fast. For your generation, like a piece of advice I give, if I can give you any piece of advice, like based on how fast AI is spreading, is that sometimes I walk around the room and I talk to young people, to students, right, who are looking for their first job. It can be in investment banking, it can be in consulting, just working for a corporation. It can be aspiring lawyers. And I ask you, so what do you want to do in life? And when the person starts talking, I say, you don't even have to tell me because your job is already gone even before you started. I'm giving a little bit more pessimistic view on artificial intelligence. Uh, movies. We don't need actors anymore. Quarter of Netflix movies, these AI generated actors, and again, it's the rate at which it's spreading is really exponential. So paralegal jobs, any job that involves you sitting in front of a computer and moving a mouse, that's going to be gone within a year or two, right? So you can think about ask yourself like, okay, I have like parents, I have grandparents, what their jobs were. Those jobs will be gone. College admission decisions are also based on AI. It means the universities will have to fire a lot of actual people, a lot of personnel. Factory jobs, gone, 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 gone. So I think our next step is going to be not so much where AI will take us, but what are we going to do with all the people who will be losing job because of AI? And we can draw a parallel to industrial revolution, right? When they created the assembly line and lots of people started starving, there was a famine around the world and people had to be retrained. But again, AI is evolving so fast that we won't even have time to retrain people. I mean, we cannot stop technological advancements. We can ban them in one country. For example, let's say that we have I mean, it's already reality. Fully self-driving car. My Tesla drives itself in the United States. It's all legit. I mean, I cannot sleep behind the wheel legally on the highway, but the technology is there. You're going to have driverless trucks. So if one country, for example, United States says we're going to ban self-driving technology because we want to save truckers' jobs, and at the same time, neighboring countries like Mexico or Canada allow them, it's going to spread to the United States. So you cannot have it's similar to when we created cars, right? Before we had horse carriages, right? And when first cars started driving on Manhattan, New York City, every news was that, well, that's not going to survive. We're going to have horses for the next 100 years. And in a couple of years, all horses were gone and we started driving cars. So it's a similar thing. We cannot stop it.
Yeah. Interesting. Okay. Well, thank you for that overview on AI. We're going to have to move on now to our practices and habits section as we are running out of time. So,
Sure, sure.
what habit would you recommend people practicing to learn more about the stock market?
Uh, well, the traditional way would be to take some classes, right? Classes can be taken at the university level. They would be longer and more structured. But again, because of technology, the entire educational sector is getting reshaped. So now you can actually use free tools. It's called AI, for example, AI tutor, where you type and it creates a customized class. And if you type just general things, I'm 18 years old, I have a little bit of experience trading currencies, trading stocks, trading cryptocurrencies. I want to learn more. Can you recommend, can you customize and design the class for me? Well, I mean, you got to be good what's called like at typing those prompts for AI, right? So using those free tools is actually can be even more. You're not going to get a credit for that. I'm going to get a diploma for that yet. Later, the universities will also start accepting AI tutor. But just using, for example, AI tutor to learn the basics of finance, the basics of investment, that would be, I think, a good thing for everyone.
Amazing. Well, that's great advice. Thank you for sharing that. I'd like to now move on to our open mic section. So, this is your chance to talk about anything you're passionate about. It doesn't have to be related to the topic so far, but it can be if there's something you'd like to expand on some more. So, the floor is yours.
Yeah. Well, maybe. Yeah. I'll try. I'll try to talk maybe like a couple of somewhat related things. So again, for young people, I like teaching about in very non-technical terms how what I call like the world operates in general, because even if you take like economics, finance, or political science classes, sometimes they don't have like the big general picture. So I'll just tell you what my view on how the world operates and where it's all heading. So it's all driven by economics and money flow. That's why I like finance so much. Not just about the stock markets, but how it shapes the societies, right? So the current structure we operate in is driven by trade flow and money flow. So basically, you have two major economic superpowers. You can add more countries there, but I'm talking about the United States and China just by the size of their economies, right? So you add Canada, you add Mexico, Australia is going to be there, the European Union, but basically we can imagine two major economic superpowers, United States and China. So they operate, and it's been shaped after the World War II, just like it evolved this way. They operate in a very, very peculiar and interesting setting that people buy a lot in the United States. It's a consumer mentality, it's a consumer spending driven economy. The same is about, actually, if you think about China and Australia, very similar analogy. So people buy a lot in the United States. At the same time, we don't produce a lot here, right? And there are good reasons for that. I mean, it would be unimaginable to have an Apple factory moving from China back to the United States. Because in China, for any Apple factory, you have to have some mines here, some rare earth minerals there. You have to have a complicated supply chain. So things are being produced in China, right? So let me look at you. You have a microphone that's being made in China. You have headphones, they're made in China. Even if there says it's made in the United States or Australia and Vietnam, the parts, bits, and pieces are all made in China. Your t-shirt been manufactured in China, maybe in Vietnam, through China, right? So you have this constant shipments of actual physical goods from China to the United States. So in the United States, we have to pay for that. How do we pay for that? Literally with American dollars. So you have stuff coming from China and American dollars going to China, sometimes in the physical form, like dollar bills. But more or less it's done electronically. So what do we have in the end? Well, we have a lot of products from China in the United States for which we pay with American dollars. And China accumulated a big chunk of those American dollars, give it or take around $5 trillion. $5 trillion is a lot. If you stack them together, $100 bills, it's bigger than many, 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 many skyscrapers. So where would you keep this money? In the cash form. It's very inconvenient to keep the money, right? So if you have trillions and trillions of dollars, you can put them on the ground, but I mean, they're made of paper, right? They're going to probably rot there. Also, inflation. I mean, dollar inflation is not large, but it's been higher recently. Inflation erodes the power of money, right? So for China, they don't actually keep their dollar bills. What they do, they transfer them immediately back to the United States. How do they do that? Well, the United States issues other types of obligations called US Treasuries. Now we're talking about what's called United States debt level, right? So we say the United States borrows a lot, especially from China. The dollar level, debt levels keeps increasing. So before the dollar bills reach China, that get exchanged back to the United States. Essentially, United States starts borrowing them back, right? Which is a really, really peculiar and very interesting system. So United States gets stuff from China for which they don't actually pay. They'll have to pay in the future. So all those trillions of dollars get back sent to the United States in terms of debt obligations. And my question is always, can it continue forever and ever? It's like you borrow on the credit card, you buy a house in Melbourne, you borrow money, as long as you keep your job and make your periodic payments, it can go indefinitely, right? Unless something happens. So the question is, that type of system of goods going from China to the United States borrowing money back from China, on the one hand, it's a very stable system. On the other hand, it's a very kind of can be very fragile system. What if you all of a sudden cut those flow of goods or flow of paper money or flow of debt obligations, right? But it also shapes the world politics. This is the system you don't want to shake too much too often, including tariffs, for example, right? Because, lots of economic variables are linked to that system: interest rates, inflation rates, jobs, employment, unemployment. But the system of this money flow and goods flow, that's what shapes the world economy and politics. This is why, for example, when people read the news, that, for example, President Trump said something, China said something back, but then it became all nice and quiet and civil and diplomatic. There are good reasons for that. Nobody ever would want to break the system before maybe we build some other system which might take millennia to build. The same is about Australia and China, right? You have to keep rhetoric a little bit down because it's the same. You have goods coming from China to Australia, for which Australia is paying with Australian dollars, which China doesn't receive, because at the same time, Australia immediately borrows them back by issuing debt obligations, what's called government debt, right? So this is how the entire world economy is operating. So this is something I always think about. I always keep at the back of our mind, especially when we get some panicking news, what's going to happen to the world. I think we'll try to keep the system at least for a while. So
Okay.
this is one thing. This one thing how financial markets shape the world politics, and whether we can keep it this way. I'm also very passionate about what I call like the general history of finance. And what I mean by that is that even if people don't know anything about the stock markets, right, and that goes back like centuries ago, people tend to self-organize themselves in the stock market. And an example I can give you is the recent history of Somali pirates. Right, there's an African country which is kind of like torn apart by many military conflicts, civil war, Somalia. Right, and there are a lot of cruise ships and freight ships, trade ships, those like big really ships with goods from China flowing like around that country. And from time to time they get attacked by the Somali pirates, right? Less so now, because now every freight ship has a military ship next to it, right? But it was really amazing to observe for me how even Somali pirates that live in impoverished villages created a stock market themselves, right? So being a pirate, even back centuries ago, being a pirate is a really risky job, right? It usually attracts young, aggressive males that need to buy weapons to attack a ship and bring the loot. So you need to have a lot of money for that. Even if you just buy like a rusty boat, you need to have a lot of money. So you go to the village elders, and you say, look, I cannot promise you anything, but there is some chance I'm going to pay a lot of money if I bring the loot if I'm gonna rob the ship, right? So what are you gonna do? So the elders in the village, if they know how to write, would write some sort of piece of paper. They would write a simple contract that I'm gonna give you the equivalent of $1,000, which is a lot for Somali, right? And in return, they're gonna give me 1/10 of the loot they are going to bring. So that's exactly the stock market, right? Those pieces of papers, the elders write in the village and give it to the pirates in return for the loot. That's the stock market. And then on the village squares, you also have people who start trading those handwritten pieces of paper. So this is just an example how if you even live any type of society that has money and has some ideas, legal ideas, there will be a stock market one way or another, even if people don't have any financial knowledge. Another example is there are lots of like now popular Netflix movies and shows about Vikings, right? So Viking society was the first prototype of what we call startups, venture capitals. When you have a brilliant idea, which is high risk idea, you need to raise a lot of money, and by definition, it's a risky idea. It might work, it may not, might work out, it may not work out. So similarly, in those what's now Norway, Finland, and Sweden, you would have those Viking villages where you have a lot of, and I don't want to say anything, but they say in Scandinavia, weather is not so nice sometimes. Sometimes young people get easily bored. When you have a lot of young, bored people, you want to keep them away from trouble. So you just say, how about I'm going to give you a chunk of money. I'm going to give you a ship. I'm going to give you some weapons, those iron swords. You're going to go. You're going to bring back money, slaves. You pillage neighboring countries all the way to the UK. And if it's successful, we finance you. We elders in the village, we finance your operations, and it's very high risk operations. But again, you're going to bring the loot back. So what I mean is that finance didn't start centuries ago. It's actually started millennia ago. So this is something what kind of like I wanted to talk about the fascinating history of finance.
Okay, well, thank you, Art, for sharing all of that. I love hearing about the history of the topics that our experts come on and talk about. So thank you for sharing. I'm going to wrap up our episode now because we are about out of time. So if our listeners want to find out more about you and your work, where should they go?
They can actually just simply Google my name and lots of resources. They will be directed to my webpage. You can make a link to my recently written and published textbook. By just Googling my name, it will show some of my interviews and some recordings of my classes, and you can find out a lot about me. And you'll always can always find my email.
Yeah, absolutely. Well, I will try and link as much as possible in our show notes so that our audience can find you easily. So thank you again for joining us today. We really appreciate you coming on the show, and I've certainly learned a lot, and I hope our audience has as well. So to our audience, thank you so much for tuning in, and we'll see you in the next episode.
Thank you, Sarah. Thank you, everyone. Bye-bye.
You've been listening to Wealth Pathways, the Affluent Science Insights podcast produced by LMSL, the Life Management Science Labs. More episodes are available from 10 life management perspectives and can be found by searching LMSL on Apple Podcasts, Google Podcasts, Spotify, YouTube, and other podcasting apps available on your devices. If you enjoyed this episode, please rate, share, and subscribe to our channel so that other people can find it and we can continue to provide quality content. More of our work can be found on our website at affluence.lifemanagementsciencelabs.com, where you can join our movement. I'm Marie Stella. Thanks for tuning in.